It's obvious over the last couple of weeks that the market conditions have changed. It's become more difficult and more choppy, and we are no longer in up-only mode. We're going to take a look in this video at what we should be doing. Is it time to exit positions? Should we be accumulating? And what is likely to come next? So before I begin this, I'd really appreciate if you could like the video, subscribe to the channel if you haven't already, and I'll leave a link in the comment section below to our free Telegram group and website if you want to find out more information about us. So looking straight away here at the total 2 market cap, we can see that we're, after a strong move up, we're in this sort of period of consolidation. But it is important to remember that this is normal. We see a lot more, over the course of years, if you look, there's a lot more sideways movement than there is up movement. So this period of consolidation we're in now is fairly normal. In fact, we actually saw this at the beginning of the year, just after sort of around the halving, around the ETF approvals. We had a period of consolidation before we saw a strong move up. And at that time, we started to see some bearish sentiment creep into the market as well. And of course, everyone then was caught out and we pushed up right to the new all-time high. We can see, looking at the crypto fear and greed index, how the sentiment has changed from being really over extra greed in the early part of March. We're sort of slowly bleeding out back towards a more neutral sentiment, and we can see that across social media. We can already see it's quieting off a little bit. People are becoming a little bit more worried, but for me this is nothing to be worried about. But what is very important is that we plan on what we do from here. So we're going to take a little bit of a look at that in the video. Now, this sideways movement is also very normal around a halving event. We can look back at the 2020 halving and we can see we had this kind of period of sideways movement, got a little move up, sideways again, and then we saw a strong move over a number of weeks up to the top of the market cycle. And even going back to the 2016 halving as well, we saw a very similar thing. In fact, we saw quite a strong sell-off on the total market cap the few weeks after the halving before this reversed, and we saw a massive move up to the top of that cycle. So what we're seeing now very likely is just a similar situation, and we've only just had the halving in the past week. So this consolidation, this sideways movement could continue for the next couple of months. Remember, May and June traditionally are quieter months for the market, so this could go sort of into the summer before we see a strong move to the upside. So in my opinion, we have to go back and look at what's happened previously, and that tells us that we probably should be accumulating strong coins. So we'll take a look at a minute in a couple of examples of areas of accumulation. Looking first though at Bitcoin and what we've seen on that, I've mentioned a number of times this 65,500 level as a key weekly support. This was the high of the 2021 bull market. This was the highest weekly close, and we can see after breaking above it, we had a number of weeks where that held a support. Last week we closed just below, and so far this week it looks like it is resistance again. So this means that we may even see a further pullback over the next couple of months, but still for me that is not a time to panic. And actually, even if we get a move into this area I've mentioned before, 53,000, this little weekly order block here, for me that is a golden opportunity. We'll see a lot of panic in the market if that comes. Alts will get hit really hard, but this is, this really would be a golden opportunity for me, because I truly believe that Bitcoin is going well into 3 figures and beyond over the coming year. So in terms of how we accumulate and what we look to buy is those coins that you're interested in. Mark out, as I've said a number of times, mark out really strong support zones, areas that you think probably wouldn't hit, and Ocean is a key example of this. Just recently, in the last couple of weeks, we have retested this this area here, which was resistance throughout 2020. It then becomes support during the 2021 bull run on the weekly time frame before becoming resistance again at the start of the bear market. This was flipped, and who would have thought a few weeks ago when we was at $1.60, people wouldn't have thought Ocean would have been available at $1 again, let alone at 70 cents. So this has seen like a 60% pullback. But if you'd mark this level out weeks in advance, you'd have been ready to buy this, to buy this retest. So you have to, you can't have this mindset of, oh, we won't see that price again, because set alerts for it, because 9 times out of 10 we will see it. So this, this is a prime example of a link, and if you'd have bought this retest, you could have already seen a potential 56% recovery from that level. So these areas and even lower, they are going to get hit if Bitcoin goes to this 53,000 level. A similar idea here on Link, not such a severe pullback, but who would have thought a month ago that when we was trading at $23 that Link would have come back down to $12, almost a 50% sell-off. We remember that Link had this massive sideways accumulation for almost 2 years, and this was kind of one of the first altcoins to lead this bull market. But for me, if we do get a pullback again with that 53,000 potential retest, then there's a good chance that Link sort of retests the $9-10 level, which is this key weekly resistance from the bear market. Again, for me, a golden opportunity would be to to accumulate even more at this level. So we've already seen a 50% move down on Link, another 50%, and we're at this key weekly level. So these are the sort of areas you want to be marking out, set alerts, and then when the price comes down to it, decide if you want to take positions. So in my opinion, that's the best thing to do for now, is to be patient, and we just have to remember that the market isn't always up only, but we very likely have at least sort of 12 to 18 months of good market conditions ahead. We've got more institutional investing coming. We've not really seen retail enter the market to cause this massive spike up yet, and also we've got US elections at the end of this year, always a volatile time for the market. So good trading conditions ahead, just really important that in this consolidation you don't get shaken out, and you plan ahead for opportunities you want to take advantage of. Thanks for watching, guys. I hope you found it useful, and I will see you on the next video.